Welcome back to the Strong Wealth Podcast. Today I have my good friend AC, host of our local meetup here in Colorado Springs, and somebody that, Jacob and I both have been able to become good friends with. And I think, I tell everybody this that I either talk to you about or introduce you to, that I think you're the most technical, savvy Bitcoiner that I've ever come across, out of all the people that I've talked to. So, but what I appreciate about you most, AC, is that you have your tinfoil hat on all the time, but you're also able to be balanced. You're able to be objective, and you really do your due diligence to learn about things, take in different sources, and then give your opinion on it. So I really respect what you have to say around Bitcoin. We're going to jump into a lot of fun topics today. But I want to start with one that I think we maybe disagree on. Maybe after this conversation, that'll be different with all the good information I know you brought for us today. But with that being said, let's jump into, is the 4-year cycle officially dead or not?
Awesome. I love the topic. Before we jump in, Mitch, I just want to say thanks for the intro. I don't see myself as super highly technical, so I appreciate that. And I do realize that multiple people are on different paths and different parts of the journey. So yeah, let's dive into, is the 4-year cycle dead? It's probably a little bit spicy, but first I want to kind of frame the conversation a little bit. So what do I mean when I say the 4-year cycle is dead? So first, let's start with some assumptions. The halvings will occur every 210,000 blocks. No argument there. That is going to happen. So that is not part of my thesis. Second, unless difficulty adjustment breaks and the average block times, target block times diverge from roughly every 10 minutes, halvings will also always occur roughly every 4 years. So what do I mean when I say the 4-year cycle is dead? Is that from the halving, 80,000 blocks or 1.5 years after the halving, or 80,000 blocks 1.5 years before the halving, where we see cycle highs and cycle lows, personally, I think this is the narrative that breaks this cycle. So if you could kind of bring up that first image, I think this paints the picture very well for most folks. And really it shows that, this is based on Rational Roots spiral chart, and he's got it aligned so we can orient people with it. At the very top, at the 12 o'clock position, are the halvings. And then roughly 80,000 blocks after the halving, we see 2 and now 3 currently all-time highs. And then 80,000 blocks before the halving, we see those alignment of those red dots. This is what I think breaks, and we can get into why I think this is true. So yeah,
so
go ahead.
Wait, you say you think this breaks this cycle, but I feel like I've been seeing tweets from you that say it's already broken. I can read one here.
Oh,
actually.
yeah.
You just tweeted recently. You said, I don't know who still needs to see this, but 2023 to 2025 was not a bull run, which I really want to hear more about that. But to continuing on, just to get through everything you said, the price run up was not pulled forward because of politics or ETFs. The recent 50% correction was not a compressed bear market. All previous models are destroyed. Position accordingly and hold your Bitcoin in air gap self custody. So yeah, I guess how was 2023? Wait. Let me back up a little bit. So has it already broken, or you think it's going to break? Let's clarify that first.
Yeah. So let's get through this whole section because I really do want to frame it, and I think that it'll make sense.
Sure.
To kind of answer your question, I think that we are in the stage where it is breaking. Just like I said in that tweet, is position accordingly, and I'll get more into what that means for me. It's not necessarily an all or nothing. Everybody's in a different stage, different position in their life, whether they're getting ready for retirement or they're early in their career. And that percentage allocation is going to be based on, their current life circumstance. So, back to that framework, this is something that I've kind of been working on and thinking about for a long time. Back in February, March timeframe, our friend Chris at the meetup, Fractal Chris, on his Bitcoin panel live stream, I laid
Mhm.
out 4 milestones that I thought would mark the transitionary period. Um, and that's kind of image 2 there. You've got it up there. New
Yep.
all-time high before the halving. I said this before that actually occurred. A stunted bear, 70%, no 70% drop, and then a break of diminishing returns to the upside. So if we look at the backdrop at the time and we look at what happened since, ETFs launched in January of 2024. Strategy's last convertible bond was in February of 2024. We didn't know it at the time, but that was the last. Metaplanet pivoted from hotels to Bitcoin, April of 2024. Strategy started aggressively accumulating with their 2121 plan in October of 24.
Mhm.
Strive launched in May of 25. Perpetual preferreds from Strategy launched in 25. And this was a full year before treasury companies really started to take off. So I say all this to kind of paint the picture that everything that's happened since then kind of only reinforces this thesis. So I think to your first point, the move in 23 through 25 uh, was not a function of 80,000 blocks after the halving. Instead, in
Mhm.
my mind, just like I painted that picture, it's a function of a different cohort of price agnostic buyers who are buying Bitcoin.
Okay, fair enough. So you're just saying it wasn't a bull run similar to what's happened historically, meaning it's usually, I guess, 2020 was really liquidity retail driven. It seemed like all that liquidity that came in from COVID, everybody had funny money and the retail FOMO went crazy. And, that's kind of what we saw in that cycle. Before then, I mean, in your opinion, I guess what happened in the previous, I mean, prior to 2017, I don't, that was just so early. But is that really what you're getting to then? Is just the drivers of the bull run were different than historic, and so that's why that's why you're saying it's not a bull run, or I guess
I'm saying that it's not the completion of the bull run.
okay,
People
okay,
who are sticking to the 4-year cycle theory, 80,000, 80K block theory, they think that that top is aligned historically like it always has.
sure,
And my contention is that uh, it is not. Where we are in that spiral chart, we've got just under 2 years roughly until the next halving.
hmm,
What I expect to see is that all-time high 126 to get erased. That eventually becomes a minor blue dot on that chart, and
sure,
a new all-time high major blue dot shows up. I also expect to see that the February low um, stands, and that we don't see another low around block 997,000. And that,
sure.
and if both of those come to fruition, and we see a red dot on the right side of that chart and a big blue dot on the left side of that chart, I don't see how anyone can continue to say that the 4-year cycle theory stands when it is, almost inverted to what we've seen in the past.
Yeah. No, I would definitely agree with that. A lot of people were throwing it out though that the 4-year cycle was broken back October, November 2025, just because of the muted performance of Bitcoin in 2025. And I completely disagreed at the time that we could officially say that. But to your point, if we do see the rest of this year, okay, we've already seen the low at 58 or whatever we got down to, and then we have a new all time high with around the time when we normally see a bear market low. I would agree with that for sure. I just can't confidently say that it has broken, but your phrasing of is breaking, I think is a likely case. We laid out
So
in the beginning of the year for our clients that we expected the low to be between 60 and 48. 48 and 60 was our range, really where we thought the low would be. And we said there is a good chance that this bear market would be less severe to the downside and shorter in duration. That seems to be happening so far, and it sounds like that's what you also agree is it would happen and is happening. But you called this much earlier back in March 2024 to give you credit. I did not hear anybody else saying this stuff back then.
yeah, the way that I look at it is if we take an engineering perspective, so if you remember the old balsa wood bridge that you built in junior high or high school, and you started to
With
add
the
weight
popsicle
to it.
sticks or something?
Yeah, popsicle sticks,
Okay.
balsa wood sticks. You had
Sure.
like some glue and a piece of paper, and you built a bridge, and then you see how long it could withstand added stress and weight.
Yeah.
As more weight or more sand was added, you started to see cracks and you started to hear snaps in that. Um, Based on those forces, the deformation forces, the weaknesses, the torsion, the shearing forces, what have you, until it eventually broke. The way I see it is this is taking place in real time, and it actually started when we had an all-time high before the halving. And based on the spiral chart, we won't know for 4 years or 210,000 blocks. In hindsight and in retrospect, people 10 or 20 years from now are going to look back and say, hey, that was obvious. But we're living through it right now. And so it's hard to see it as we're going through this transitionary time. And that's kind of where my mind is. I see cracks, and I hear these snaps. Another one that I had talked about was the all-time high before the halving. But another one is the three greens, one red. That broke at the end of 2025 when
Yeah.
25 ended in a red year. So not to say that is the definitive moment, because it's not. The definitive moment is going to be at the next halving, but it is
Mhm.
yet another crack that is an indicator that we are living through the transitionary time.
Fair enough. And this is why I appreciate your intellectual honesty, because I feel like a lot of people would say, "Oh, three greens, one red. Oh, it's officially broken." And that's what a lot of people were saying. And you just there's a lot of people that share a lot of takes that I just can't take seriously in Bitcoin. But that's why I appreciate your perspectives on it, because they are nuanced. You do add context, and I think most of the time you're spot on in the things that you're saying. So, um, then what about these? So you would agree that 2023, 2025, it was a bull market, but just the drivers were different, it sounds like. But you
Yeah,
would
I
also
would call
agree that go ahead.
it more like price action. Um, and I don't remember exactly which image it was, but it was Sminston's chart of, I think it was near the tail end. Keep going, keep going, keep going. After this one. No, back up a little bit. I think it's Sminston's chart that really kind of paints it for me. He aligns Bitcoin price with business cycles, and he and many others who've reposted this kind of say that we've never had a full bull run when the business cycle PMI is below 50. And that's exactly what we're seeing right now. So, again, it is nuanced. I would say that in my eyes, it's more akin to price action. The movement from the beginning of 2023 to 126 was more price action, and we actually haven't seen a true
Mm,
bull run yet. So, um, yeah, it's hard to put that into a
sure,
tweet on Twitter.
sure.
Like you said, it is more nuanced, and a lot of times it requires conversation or a
Yeah.
long article on Twitter, which I'm not going to do.
Fair enough. But so basically, if I'm understanding you correctly, you feel like, I mean, maybe the whole FTX collapse really made the bear market a lot more severe than it would have been otherwise, and then this was just kind of recovery out of that. But it may it maybe what I'm hearing from you is this recent price action from October through where we are now is kind of just a break in the action rather than a true bear market. Even though, if we really use traditional financial terms and we define what is a bear market, traditionally that's defined as an asset dropping 20% or more. So if it's below 20% from its most recent all time high, it's in a bear market. So I think a lot of people maybe get confused just by those terms. If we define it that way, then Bitcoin definitely is in a bear market. But for Bitcoin for for Bitcoin, it's not really the 2022 Bitcoin winter, if you will, that we might have had. And so, is your opinion then the bull market was just taking a break, and now it could be back on in the second half of this year? Or
Yeah, that kind of speaks to um, using definitions and terminology from the previous system or from Wall Street and trying to apply it to Bitcoin. If we were to use that same 20% drop, we see multiple bear markets that kind of,
Yeah.
the chart gets very messy. I don't think that there's a widely accepted um, percentage drop in
Sure.
Bitcoin terms, but what we've historically seen is 70% or greater. So in my mind, that is what characterizes a bear market. This is the first time that we haven't dropped below 70%. And that's why I used that criteria back in 2024 to say
Yeah.
that I think we're not going to see anything below 70% correction here moving forward.
Want to retire soon, but you're unsure how to manage Bitcoin volatility, avoid selling your stack, and generate income from your portfolio? Imagine heading into retirement knowing that no matter what Bitcoin does next, runs to new highs, drops 60%, or chops sideways for years, you're good. Your income is secure, your stack is intact, and you're not losing sleep over it. That's what Strong Wealth offers retiring Bitcoiners like you. Book a free discovery call today at strongwealth.net to find out what retirement can look like with the right plan supporting it. Go to strongwealth.net. Now back to the show. Fair enough. What do you think is the actual causation of this? Do you feel like, because you said also in that same tweet that this isn't a bear market, which I think we kind of just spoke to, or wasn't a compressed bear market. But you also said the price run wasn't pulled forward because of politics or ETF. So, what do you feel like is the actual driver of the price action? You know, really, I mean, 2025, especially, maybe a little bit before that. Do you feel like it is just the macro, business cycle, maybe, or there's some other macro factors that really just didn't give Bitcoin the chance to run? Or do you feel like it's maybe different market players coming in? What's your opinion?
Yeah, I would say that personally for me, I think it's more related to strategy. They started their Bitcoin treasury strategy back in 2020. In the very beginning, it took time. We did not see the accumulation back then that we saw as the strategy was being developed, or as people like to say, the plane is being flown while it's being built at the same time. So I
Mm,
personally attribute it more to that, possibly a little bit of euphoria in that stage as Sailor's stride is starting to accumulate more. Certainly, so I'm not discounting the red wave that Sailor talks about. I'm not discounting the ETFs, but I think that because obviously all three are contributing to that, but I think in my mind the majority of that euphoria, of that retail FOMO, came more from strategy than it did from institutions like BlackRock.
wait, are you saying that the the euphoria or the FOMO, that capital went into strategy stock or went into Bitcoin treasuries? Because we did see that late 2024. There was just a astronomical run, and it seemed like every single person who announced they were going to buy Bitcoin and put it on their balance sheet would go up by thousands of percent within a few days. So, are you saying that that really took a lot of the euphoria away from Bitcoin itself? Am I understanding
No,
you
no,
correctly?
no,
Oh,
no.
okay.
So you would ask, what was the major cause of the 23 through 25 price action?
Okay.
And in my mind, the majority of that is that FOMO euphoria in treasury companies, less so on politics and less so on ETFs. Um, I'm not a TradFi guy, so I don't know what that split looks like. Um,
Sure.
whether it's the majority of retail buying something like IBIT or FBTC, or if it's managers allocating to that. That would inform, kind of my thesis a little bit. Um, Black box outside looking in. I think it's probably more of the latter. Less retail is actually going and buying it, and it's more so fund managers and advisors who are buying it. But again, pure supposition, speculation on my end. And so that's why I say it's not necessarily the ETF, because I don't think retail is FOMOing into the ETF. I think that retail FOMOed into treasury companies during that time frame.
So why was 2025 so bad then, in your opinion? I mean, I say so bad, but
You mean the end? The end.
compared to his history, it was not good for the part of the cycle we were supposed to be in. So, do you feel like that's just because the cycle's breaking, or do you feel like it's different market players? Or
Well, I guess what do you mean by so bad? I think we spent um, off the top of my head like 6 months in 2025 above 100K, and it was only after October into November where we started to see that drop. So
Sure.
I don't necessarily see it as a bad thing. Um,
Mm.
I do see it as a changing of the guard and a different cohort of buyers. Um, and then you overlay like the ramifications of COVID and inflation, cost of living, people having less disposable income, as we'll call it, to be able to play games in the stock market or allocate to higher risk on assets. Um, I think that all plays a part into why we didn't see a blow off top. People allocating or don't have the money to allocate in that situation.
Yeah, no, that's fair. Because I I believe that Bitcoin is largely driven right now still by marginal liquidity. And in 2020, that COVID, that marginal liquidity was substantial because of the money printing. But this time around, it just didn't happen that way. The liquidity for the course of 2025, global liquidity was just kind of waning. It wasn't necessarily sharply decreasing or increasing. There was a steady small rise in global liquidity that then started to turn over towards the end of 2025. And, I feel like that's a lot of what drove Bitcoin's price action. And so maybe we will see that liquidity come back into the system. And again, this is marginal liquidity. I think a lot of people mistake the, USM2 is going up. And so Bitcoin should be going up. That correlation was there for, I don't know, there was a period of time where everybody thought that that is exactly what was going on with lag, whatever it was. But I think what people miss is, what really matters is the marginal liquidity, which is, liquidity at the edges, of society, because they have to continue to print money just to keep the system alive, just to keep the system afloat. And so there's always going to be some new marginal liquidity coming into the system, or new liquidity coming in, but it might go to other market players, or other areas of the economy. It's only when it's too much and they print too much money that then we start to see these wild swings in Bitcoin, at least in my opinion. So maybe that could be the driver of it. Um, I am curious to get your take. This wasn't necessarily on our outline, but it's right here in this same vein. I just had a conversation with another Bitcoiner, who is basically concerned about the introduction of digital credit and ETFs and kind of the takeover of Bitcoin by Wall Street. He felt like we're going to see muted returns in Bitcoin from here on out because of, now Bitcoin's ethos has been largely diluted, and retail doesn't really seem to care as much as they may have cared about Bitcoin before. Do you feel like that's a negative on Bitcoin, or do you feel like the introduction of the Wall Street players, institutional players, is actually a positive that was kind of inevitable at the end of the day?
Yeah. It's a good question. Um, when the ETFs first came out, people said that this is Bitcoin's Trojan horse into Wall Street. And um, I said it at our meetup, and I don't remember if you were there or not, but I also said, what if the opposite is also true? And this is Wall Street's Trojan horse into Bitcoin.
Mm.
And that's something that's kind of been lingering in the back of my mind ever since I said it. Um, so I think that it's a non-zero chance that whoever you spoke to um, could be right. Um, but at the same time, um, I think as long as Bitcoin remains secure, decentralized, censorship resistant, confiscation resistant, and I focus on that last one. Um, Everything is good for Bitcoin, um, because there are other things that are potentially at play. And this is one of the things I love about Bitcoiners is that always adversarial mindset. You know, Bitcoiners were built on things like 6102 confiscation of gold in 1933 or whatever year that was. And so it is at the forefront of many Bitcoiners' mind. And that's why most Bitcoiners or many Bitcoiners think self custody is so important for that reason. So, we're getting deep into the hypotheticals. Um, but if there was ever a move to nationalize Bitcoin, it becomes a major asset globally. And just like gold has been nationalized to a lesser extent, although we have the petrodollar, oil has been somewhat nationalized. Um, what are the possibilities or probabilities that something like that could happen with Bitcoin? Let's assume for a second that, you know, the possibility is somewhat high. Maybe the probability is low, but possibility is high. Um, these custodians and these companies that are uh, building these products would most likely be the first to be nationalized. And what does that mean for Bitcoiners who hold in self custody? Nothing. What does it mean for people who have exposure to Bitcoin through some of these vehicles? Possible repricing, possibly paid back in a constantly melting ice cube, getting diluted in dollars. Um, so I don't know if it's possible or probable, um, but that's why I think that Bitcoin in self custody is so important. And then again, everything, as long as the underlying fundamentals remain with Bitcoin, everything is good for Bitcoin. Even this confiscation would only strengthen and reinforce Bitcoin moving forward.
I agree that it could, but wouldn't you say that just US dollar price would suffer substantially for a long time if there was some type of 6102 on Bitcoin? I mean, I know the kind of non-dollar value of Bitcoin would theoretically be very high in that case. And so there may just be a different market for Bitcoin because it is still free, decentralized, secure, like you're saying. Um, but I worry that adoption would really suffer. The USD quoted price that I still think a lot of people look at, and it is still meaningful to people's lives because unfortunately we do still spend in dollars most of the time. Um, I don't know. Do you feel like that would really hurt Bitcoin for a long time? It wouldn't kill Bitcoin by any means, and it'd come out the other side, people recognizing, oh, this is why Bitcoin's actually valuable. But I don't know. I could see it really hurting things for a while.
I think maybe. I also see the opposite is true
Mm,
of Bitcoin held in self custody carries such a great premium. But it depends on when something like this would happen and um, what the distribution looks like at the time. So I think about I think it's like every month or every quarter, River puts out the Bitcoin distribution chart. It's a little table.
yeah.
Last time I looked at it, I think Bitcoin held by individuals was like 14 million coins out of the less than 21 million. Um, but if you look at it over time, the number of Bitcoin held by individuals has slowly started to decrease as we see an uptick in institutions and ETFs. And so, as long as individuals hold a large percentage of the overall supply, then I
Uh,
think that the price carries a premium. If Bitcoiners and plebs screw this one up and we continue to sell to institutions,
mhm.
that's when we put ourselves in a dangerous situation.
Fair enough. I know we're kind of getting out into the hypotheticals, and it's very hard to say. But I think a lot of Bitcoiners can still derive value just from playing this out a little bit further as far as what could happen. Because, it seems like government intervention is very welcomed for at this point with the strategic Bitcoin reserve and cheered on and excited for and the Clarity Act and all this other stuff, which is strange. But yeah, we don't need to continue to go down that rabbit hole any further. I want to just loop back and maybe button up the 4-year cycle conversation. When you said in your tweet, you said diminishing returns breaks to the upside. Are you referring to like we're going to see like diminishing returns are not going to be reality, meaning we're going to get higher performance than we expect, or are you saying that it will be diminished further than people expect?
No, the former is exactly what I was saying.
Okay.
I haven't seen somebody put a chart out on it in a while, but basically it was kind of this um, curving chart that hit all of the previous all-time highs, and then it asymptotically goes towards flat, and people call that diminishing returns. You can kind of see it now where um, every all-time high is substantially lower on percentage terms than the previous, from the low to the all-time high. I think we're in a situation where that breaks to the upside, and you can no longer draw that curved line that connects 3 or 4 all-time highs.
Yeah.
That's what I'm saying.
So how do you feel like that happens though? What
Um,
drives that, I guess?
I'm not sure I know what you mean. Are you talking about like, is it further adoption? Do I think it's further adoption or?
I mean, you're basically saying that because in my opinion, I do think we're going to see diminishing performance from Bitcoin. I feel like Bitcoin, if I had to just characterize it and sum it up in one sentence, I feel like there's a decent chance. Obviously, you have to think in probabilities anytime that you're trying to predict the future and position yourself accordingly. If you don't think in probabilities, then I don't feel like you're being intellectually honest, in my opinion. So, but I feel like there's a decent chance that if I had to sum it up in one line, that Bitcoin will be the highest performing index fund going forward. And so, what I mean by that is, it might be S&P 500 QQQ like dollar returns, but slightly higher. So, we've seen 13% CAGR over the last 5-10 years on the indices. I think that's going to continue to creep up as well, just because of the amount of money printing that will have to be done to keep the system afloat as we go forward. Um, and so I think Bitcoin will just be a little bit higher than that. So I'm curious, what drives your thesis of feeling like that's going to break to the upside and we're going to get maybe 2017 like performance again in Bitcoin?
Yeah, I don't know if we'll get to 2017 performance. On percentage terms, I remember late 2017 where I'd go to bed and wake up and we were up 1,000 points, multiple, or $1,000, I should say, multiple days in a row. Um, and that was when Bitcoin ran from, I think, like 10,000 to 20,000 in a short amount of time. So we're talking about massive moves daily, back to back to back. Um, I'm not suggesting that we get to those, to that level again, and I hope that we don't. When we have massive blow off tops such as those only lead to massive corrections. And
Yeah.
so I see this more as a stair step movement upwards. But to answer your question, I think it's a combination of two things. Number one is the global rate of adoption, whatever you think that percentage is. Some people think it's single digit percentage of 8 billion people that hold a meaningful amount to them in Bitcoin, depending on their location and their jurisdiction. Um, so if we hold single digit percentage adoption across the entire world, number two, and you've kind of alluded to it, is the uh, the devaluation of fiat, or the devaluation of the dollar is going to make that chart look wonky. There is no single chart that takes into account, inflation adjusted prices. And so if we combine more adoption with a more rapidly inflating dollar, where it's going to take more dollars to purchase a Bitcoin, then the chart is going to look weird. Um, what does that mean in purchasing power? I think if we think about it in purchasing power, then it's probably somewhere in between, uh, closer to the way that you see Bitcoin growing from a purchasing power perspective. But I think in dollar terms, it's going to look, it'll break diminishing returns in simple basic dollar terms.
Okay. So your thought process is it's kind of that S curve of adoption to some extent, and price may follow that as well, to where we saw the early days where it was kind of straight up, and then we have a little bit of flattening out. Maybe we're in that flattening out now, but then it can shoot right back up later on.
Yeah, I do like the S curve. I think it's a little bit bull-tarded, but I think that if if
Sure.
Bitcoin does what we think it's going to do, and it becomes, a global reserve asset, or at least widely accepted, deeper into double-digit percentage terms of the global population, then it breaks diminishing returns and it starts to look somewhat more like an S curve. Or, like I said before, it looks more like a stair step over a massively long period of time, where you've got a run up, movement horizontal for a while, another stair step up, horizontal movement. But now I'm talking about a scale of not even just years, but probably decades, when it
Mhm.
starts to appear that way.
Gotcha. Okay. I can see that. I can see that. Let's transition to our next topic then. I feel like that really sums up the 4-year cycles and your thoughts on it, and I think it is very insightful. Maybe before I do though, were there any of these other slides that you wanted to make sure we touched on related specifically to that topic before we change? Just because this is good information, and I would like to share it.
Yeah, yeah. I mean, if you want to just pull it up real quick, I can kind of try to work my way down the chart on how these things kind of frame my perspective a little bit. So yeah, we can skip that. That's a different cohort of buyers by cycle.
Okay. No, this is good. This helps put I remember seeing this chart when I was looking through it initially, and that kind of informed what I said before, but this is kind of your thought process behind, the market players have changed, and that's why the price action has changed essentially.
Yeah, and
Okay.
just to put a little bit more detail on it, some of that retail euphoria, um, like you said, people have less marginal liquidity, and so they're not moving in as much as they did in the previous cycle. Whereas institutions are kind of really taking over the current cycle, and why we see that muted or stunted bear, and we're not seeing um, massive runs up to the euphoria stage, because institutions, um, so like when Saylor had his 21-21 plan, sure, he could have blasted 21 billion in one shot, but then he prices himself out, right? So it makes sense for him to do it in a more diligent way, as he puts it, to have less impact on the price. And so that's kind of how I see, buyers by cohort of buyers, majority of cohort of buyers by cycle.
Yeah. No, that's fair. All right. What do we have
Um,
here?
Yeah, so this one is a weekly RSI, and for me, this is why I think that red dot in February of 26 prints as a low. Is the movement of the RSI suggests that the bottom signal was in, and it reinforces that we didn't see um, greater than 70% drop. So I think bottom signal is in February 26, and then we've got just under 2 years um, before we print a major new all-time high, which would negate the previous one, aligned with 80,000 blocks after the halving.
Gotcha. So we have the weekly RSI. Okay. I'm
Yeah,
with you.
weekly
All right.
RSI suggesting a bottom.
Sure. Fair
And
enough.
then not just me. This is work from Cena over at 21st Capital.
Yep.
He identified a momentum shift in April of this year as well, suggesting that we're really pivoting. Same is true for the next one. I think it compares U.S. 10-year treasuries versus um, Chinese. Oh no, I'm getting ahead of myself. I actually can't see this one. Um, yeah, similar. I
It
can't
looks
read
like
it
this is
right now.
a different, RSI.
Yeah, just
This is US 10-year mul
oh,
times
this is U.S.
Chinese.
10-year
Yeah,
versus Chinese 10-year.
gotcha.
Again, suggesting a reversal, bottom signal reversal in price action as it relates
Yeah.
to Bitcoin.
Gotcha. What do you know what this momentum model, like, what are they using to quantify momentum? Are you familiar?
No, I don't. I think it's I've seen a post about it a couple times, but I haven't seen what he includes um,
Gotcha.
in the model. And um, yeah, I suspect it's probably something proprietary, closed sourced, but I
Sure.
don't know.
Sure. I got you. I was just curious. All right.
Yeah, and
I'm
then
over
this
here.
one is the pi cycle top indicator. Um, Pretty accurate over previous cycles of when a top was hit. And this shows that 126 was not actually the top. And so this is another one that informs my position that there's room to run here in 26 and 27. Um,
Mhm.
and why I think that we're going to print that major blue dot again in the two quadrants that are typically cycle lows, thus breaking the 4-year cycle as defined.
Yeah, fair enough. I think macro is points to that as well, with a lot of things that are going on. It kind of seemed like 2025 and was really Bitcoin's time to shine, and it didn't. But maybe that's just because it hasn't yet, to your point, and so maybe we will see that. Um, all right, moving on to the next one. We've got
Oh
another
yeah,
spiral chart here.
yeah. This kind of paints the overarching picture of what I was trying to describe. So where I've got it labeled as actual top, that was 126, and like I said, as it stands right now, the cycle hasn't completely broken. That major blue dot is right on time. Um,
Mhm.
and the February low I've got marked with a question mark. If that stands, that is nowhere near um,
Yeah,
the previous cycle lows. And so if we play out the theory a little bit,
yeah,
if we have a major blue dot that breaks 126 between now and the end of 2027, I think that's the final nail in the coffin that we can safely say the cycle is dead.
yeah.
Um, but like I said, it takes since we're living through it. Um, it's hard to it's hard for most people to actually see it until it happens.
Yeah, I really appreciated your analogy though of the bridge. You hear the cracks, you hear that it is actively breaking. You don't need to wait around and wait till you fall off the bridge because it fully fully cracks to know that it is breaking. And I would agree with you. And I think there is a decent chance that that red dot does continue to stand as we go through the rest of this year. I don't think we're out of the weeds yet with the whole Iran conflict and seeing what the impact of that kind of air pocket bubble, if you will, in supply chains, what the second, third order effects of that are on the rest of the economy. Um, but what has their response been in the past? Print money. So it's kind of that like the timing is what really matters here. If you're trying to trade this, which if you are, you are. If you're not, you're not. I see both sides, but we could still see kind of a severe quick drawdown, in my opinion, because of all of that stuff. I feel like a lot of people, maybe the market in general, just kind of was lackadaisical a little bit about the conflict and what the implications impact could be, just because in my opinion, we've lived in a fiat world now for long enough to where, I mean, like all Bitcoiners say, fiat kind of distorts our view of reality. But when you have a interruption in real goods, you can't, Luke Groman loves to say, you can't print oil. And I feel like the repercussions of that are still possible to come here over the next few months. We'll see if that happens, but I do agree with you that is breaking and likely to break are true with where we stand right now. Let's see. We already went over the business cycle one. We showed that for a
Yeah,
little bit. This is kind of looks like similar business
yeah.
cycle.
It's just a slightly different representation of the same business cycle theory.
Gotcha. All right. What do
And
we
then
have?
this one is checkmates chart, and really he's looking at the bears lines of defense, and he's identified um, like you said, gaps or pockets of liquidity, as well as support resistance lines, and how he sees um, target areas that need to eventually be broken for us to make that move to new all-time highs.
Yeah. No, I like this because I do think it's important. I think a lot of Bitcoiners may when they're thinking about price action, they kind of lean towards or prefer fundamentals over technicals. And fundamentals being, what did Saylor say? What is Saylor doing? What did Trump say? What is Trump doing? What is the Fed saying? Like all these kind of things. The narratives. They let the narratives drive their predictions or their convictions around the short term. And I feel like it's kind of it's very short sighted, in my opinion, when you need to look at the technicals as well, because they do play a factor. I mean, for us, I know a lot of people use the 200-day moving average as kind of like long term trend signal. So, you're shifting from a downtrend to an uptrend and holding that 83K number could be that. For us, we also look a little bit further out. 300-day is where our Bitcoin signals are. We're about 10%. If Bitcoin moves up 10% from here, that would be a buy signal for us within our strategy. So I do feel like, we're really on the cusp here where we're about to find out, is this true? A lot of signs are pointing to it. And so the price action is kind of where we're at the point where rubber meets the road, I suppose, to know if we're right or wrong.
Yeah, and that's why I really appreciate Checkmate's analysis, um, because he looks at primarily on-chain data versus a lot of other chart squigglers who don't. And really, he can start to derive sentiment
Right.
based on actions on chain. When people are selling, whether it's short term holders or long term holders, are selling or buying into accumulation or selling into depreciation or what have you. I think that is probably the most accurate way to look at it because people are voting with their dollars or they're voting with their checkbooks. Versus, some of the trend analysis or what we would historically call TA or technical analysis. Um, I think a lot of that just doesn't apply as well to Bitcoin as it does to traditional markets.
Maybe. I think maybe I would say that what Bitcoin offers that a lot of other traditional markets don't is more transparency, because we can see the on-chain activity that allows you to really get an idea of what the market is thinking about things in current reality. And so, but I don't know. I don't know fully if I would agree that TA is not as applicable to Bitcoin. Yeah, we'll see.
No. That's not what I said. I said
Okay,
that on-chain analytics is more applicable than
gotcha.
TA.
Fair enough.
Because you can derive a lot of information. Like if we look at somebody who's buying and selling Google, you don't necessarily know what their cost basis was or how long they held it. Whereas you can look at the UTXO and you can say, "Hey, I know for a fact that this was purchased at this time at this price. I know their cost basis. I know their profits." There's way more information that can be derived on chain versus your typical TA. So yeah, just to make that point, I'm not saying TA is irrelevant. I'm saying on-chain analytics is probably more accurate than TA.
Fair enough. Fair enough. What do we have here? Cycle drawdowns, peak to trough recovery patterns.
Yeah, yeah, peak to trough, and really, I think the next two kind of show the same thing. If you go down to the next one, this is the one that's more interesting to me. Is you've got the previous cycles peak to trough grayed out, and the current cycle in orange. Um, if if we're right, and February 26 stands as the low, yet again, this is another example of that 80K 4-year cycle history is breaking because the low prints so much earlier than any of the other cycles that like on the spiral chart, it's on the other half of the circle that I couldn't imagine if this prints as a low and somebody still subscribes to the theory. Um, it just wouldn't make sense to me anymore.
Yeah, I'd agree with that. All right, so I feel that goes through everything. Any other final thoughts on just the 4-year cycle theory? Your thoughts on it? I feel like you've laid out a really good case as to why you feel like it actively is breaking, and we're only one or two confirmations away from saying it's fully broken, which I would agree with. Anything you would add on that before I transition to another topic?
No, I think that's it. Um, I think that time will tell. Um, I'm kind of throwing myself out on a limb here, making these broad brush. Some people might call them hopium predictions, and I'll just kind of reference Malcolm Gladwell for anyone who's read the book Blink, and it's like
Mm,
you when you're in Bitcoin for a while, you start to see what he called rapid cognition, where you see things that um, others might think you're crazy for seeing, or they just don't see it. And that's kind of where I stand with at that time in 2024, these dominoes were lining up that for whatever reason, random synapse in my brain, something triggered, and I thought, hey, this is probably the cycle where things start to look a little bit different. Um, like I said, probably a little bit of hopium back then, but more things are starting to align to reinforce that thought. We'll
yeah.
see.
Absolutely. Time will tell, as you said. I want to hold on to the thought, though, of maybe this is Wall Street's Trojan horse into Bitcoin. I feel like that's going to be something we need to revisit in a later conversation because time will tell on that as well. But that's for another conversation, which I'm sure we'll have. I want to pivot now to discuss MSTR. So I saw that Saylor finally admitted that they'd be willing to sell Bitcoin in order to fund the dividends for STRC, their other preferred products, rather than funding them entirely through dilution of those shares. So I think you said here's your quote. We'll start with, and then we can continue from there. But you said last night MSTR announced possibly selling Bitcoin when it makes sense. Smooth brains freaked out, but when you zoom out, selling combined with Spec ID, just identifying their specific cost basis lots, so they'd be able to sell Bitcoin. That they have purchased, above 100K, for example. They've effectively created a tax loss harvesting engine, and when paired with STRC, they could sell Bitcoin by more than or equal to the amount sold while capturing the loss on a month to month, quarter to quarter basis, depending on when required to disclose. This would likely be a nothing burger while continuing to increase Bitcoin per share. So I will say I do agree with you here. This is a positive step, in my opinion, for MSTR. This was always one of my biggest hangups with them was just funding this entirely through dilution. And this was, to be fair, this was really the largest driver of the whole MSTR as a Ponzi, argument. And, it's not, I wouldn't say that it is, but I can understand where that argument comes from because of how they were operating. But in my opinion, this does change that substantially. However, what my next hang up is with this is I believe that the common stock MSTR is largely sentiment driven. Maybe not, but I feel like sentiment is a big part of the investor base or thesis in MSTR. And so, do you feel like this decision to possibly sell Bitcoin? I assume they're going to follow through with it now. They'd be stupid not to, in my opinion, to throw it out there and then not do it. You've already kind of got everybody up in arms. You might as well follow through with it. But do you feel like this hurts sentiment on the common, and then potentially does hurt their ability to raise capital?
Um, so I think that again, I think we're in this transitionary time. Um, I would agree with you probably a year ago or earlier that strategy was primarily sentiment driven. Um, but I don't think that that's the case as much now. So if we look at the past, um, you know, strategy would announce a convertible note for whatever billion of dollars and with their intention to buy. And it would be a week before they would announce the next purchase of 10,000 Bitcoin. And sentiment would rip, price would go up. And then in October of 2024, they announced their first 2121 plan, and the market loved it, and price ripped. Um, and then I think this is where we get into that transitionary time, um, we start to see more and more large ATM purchases, and there's no reaction. There's no sentimental reaction at that time. And this changed even more with the perpetual preferreds, and even with STRC until just recently. STRC is buying, sure, STRC is moving, um, but for the most part, strategy, the common, was kind of moving sideways. Certainly not anything like um, the rips that we saw of the past. So I'm not convinced that strategy is as sentiment driven today as it was in the past. A couple good examples are, um, buying a month's worth of mine supply in a single week and no change to the common. So I think we're in that period where it's less sentiment driven today than it was 2 years ago.
So do you feel like people have fallen asleep then on the common shares and or no? Because you're saying it's less sentiment driven, they're buying a ton of Bitcoin and there's a lot of I don't know the exact numbers around it, but the last time MSTR was around this price range, they had like half the number of Bitcoin or something like that. It's just an insane difference. So do you feel like people are
Yeah,
just falling asleep on it or what?
I think, I think that's probably part of it. We talked about marginal liquidity and disposable income earlier. I think that's another part of the equation as well. And for those that are paying attention, that aren't asleep at the wheel, I think a lot of people just don't understand the preferreds and the use of different ATM vehicles. And to be honest, I don't fully understand it either. With all of these new terms, whether it's digital capital or digital credit or torque, I don't fully grasp what all of these things mean. And so I think it's one of those where if you don't understand, people are more comfortable to stay on the sideline um, with the common, uh, I and probably with the preferreds. And I also think that Sailor's in this stage where um, we see multiple monthly buys. Maybe it's 2 buys a month. Um, that he's kind of normalizing and desensitizing people to accumulation, kind of like that sly roundabout way that we talk about from an Austrian economics perspective. So I can't put my finger on exactly why. Those are probably 2 or 3 reasons. They're either asleep at the wheel, they don't understand the evolution of strategy, or they're just desensitized um, to what they're doing over there.
That's great. Maybe I took us too far down the rabbit hole of this question. I want to get your a little bit more context as to why this is a good thing in your opinion that they're
Oh yeah,
willing to sell the Bitcoin.
yeah. So I completely forgot about that part of it. Um, I think it's actually a good thing. And let's take a step back and think about um, Sailor and strategy. You know, a very public figure, especially in Bitcoin circles, who says and tweets things from time to time. I think the misunderstanding comes from messaging and target audience. Um, when Sailor says something, most people think he's talking to me. Um, when in reality, I think that he's talking to a much smaller demographic and a much smaller subset. Um, but he doesn't have the ability to go down to that level of detail. So he says it broad brush. A good example of that would be when he said, uh, first rule of Bitcoin, don't sell your Bitcoin. Or when he says, never sell your Bitcoin. Um, I think he was actually talking to a small group of people, specifically OG long term holders, um, because he could see
Hmm.
what happens when they sell, whether they sell to him at strategy or when they sell to something like an ETF. That Bitcoin gets locked up, and it's no longer um, movement from that point on is no longer visible on chain. It's a paper ledger at BlackRock or Fidelity or something like that.
Yeah.
And it certainly wasn't a message for him. People get up in airs about him saying he's going to sell Bitcoin. The truth is that's been in some of their filing documents for, I think, years. And if I remember right, I think it was December of 2022, they actually did sell Bitcoin. People who, maybe people who got in to strategy or started following strategy after that point don't realize it. But it's always, I think it's been an option for them for a very long time. What I did find interesting is when Saylor mentioned it at the earnings call, he said inoculate the market. And that's not a term you typically hear at an earnings call. And so I really keyed in on that. And it's, to me, it's more, again, sending a message. When you inoculate the market, you're sending a message that I do in fact have the ability to sell Bitcoin. And when I do it, you're going to see that I have the demonstrated capability. And I use those terms, as you know, part of my background, I was in the military for over 20 years, ended my career at the operational strategic level, and we use the term deterrence. And that's straight out of the textbook. That's, the capability to do something, whether it's a nuke, and the willingness to use it. And so really, I think this might be somewhat of like a 5D chess move, where his inoculation of the market by selling a small amount of Bitcoin is his ability to do so and the willingness to do it. Now the question becomes, why? And I think, again, this is messaging. This isn't to plebs to say it's all over, sell all your Bitcoin. I think this is more of a message to credit raters that Strategy's products deserve better than a B- rating. And he is willing to sell Bitcoin to ensure that the company does not go insolvent, and that those actions merit a higher rating. So that's why I say that actually him selling Bitcoin is probably a good thing. And actually, I'll also kind of disagree with you. I think him saying it and then using the framing of inoculate the market, I wouldn't be surprised if he sits on it and doesn't sell for a long time and waits for people to forget. Just like people forgot about December of 2022, I think that I wouldn't be surprised. I'm not going to say he does or doesn't, but I wouldn't be surprised if he sits on it and doesn't sell in the next 1, 2, 3, 6 months.
Yeah. No, fair enough. And to your point about the credit ratings, I really do think it puts MSTR in a much stronger position overall. And it increases their legitimacy, in my opinion, just if they are actively willing to sell Bitcoin when it makes sense for them as a company. Just, strictly because, I mean, the whole thesis is and has been, I guess, in my opinion, was just to arbitrage the difference between STRC's yield and Bitcoin's CAGR. And in order to do that, you have to actually be willing to sell Bitcoin to fund the dividends. Like, that is the nature of arbitraging the difference in those returns. And so when they were never, I won't say they were never willing, because it sounds like maybe December 2022, they did, which I did hear someone else mention that, but I never looked into it myself. So you might be right, which would be crazy that everybody's kind of up in arms about it now when they've already done it before. But that's the whole thesis becomes stronger, in my opinion, when they are willing to do that, because it actually legitimizes, in my opinion, the collateral that they have. They would always say, Bitcoin only has to go up by 2% CAGR a year in order for this to work. Oh, we're over collateralized by however many billions because of the Bitcoin that we hold. But if you're never willing to sell it, then does it really matter? Is it really collateralized by that? Is that really backing up the products that you're putting out there in the market? So I think the willingness to sell is actually a very positive signal, in my opinion, to make them more legitimate to larger pools of capital, maybe.
Yeah. Again, maybe it was a spicy take, but I ultimately think it's a good thing. And kind of what I had alluded to in that post as well And again, let me caveat this by saying I'm not a TradFi guy, so I don't know all of the mandatory reporting periods, right? I know that we've got quarterlies, and I know that Saylor likes to release 8Ks every time he pulls the trigger on some Bitcoin, but I don't know if those are required or if he chooses to do so. But either way, my point is, um, the reason it might be a nothing burger is, let's say he sells a small sliver of Bitcoin just to prove that he can. Um, I don't know if he has to report that immediately or if he has to report that at quarterly earnings. Since I'm a outside guy, I'll assume it's quarterly, and then he buys Bitcoin over the course of those 3 months that dwarf the amount that he sold. And then quarterly earnings comes around and he says, I sold 1,000 Bitcoin, but I bought 30,000 Bitcoin.
Mhm.
Then it really becomes a nothing burger. Like net positive 20K Bitcoin, nobody's going to care. If I'm wrong about my assumption, because I'm not a TradFi guy and there's different reporting timelines, maybe that changes. But I think there's a possibility that the market reaction is going to be significantly muted.
Yeah, I'd agree with that as well. I don't know what the reporting requirements are for public companies, so I couldn't say. I'd have to, if I had to guess, I'd guess quarterly too. And to your point, I'd agree that, if they're net, substantially a net buyer still in the market, that it's like, okay. Again, I think it strengthens their position. Um, Let me transition to the next topic then, because I think it's right. It kind of pivots right into this really well. I feel like I'm starting to see two different worlds, kind of, or maybe two different teams, if you will, in the Bitcoin space form. And I think you're a great person to speak to this because I think you can understand both teams. So one team is Team Sailor, someone I talked to who went to the Las Vegas conference. You may be able to share your experience as well. They said it was all about digital credit. That's what Sailor's been throwing around, and you may have a different perspective because of your work with the Bitcoin Mentor. Um, but that's kind of the talk of Bitcoin. That's the new exciting thing. That's the new direction that everybody feels like is the next catalyst, if you will, of Bitcoin. And so, Sailor's kind of referring to Bitcoin, in my opinion, as digital capital, which is very different from peer to peer cash, like was laid out in the white paper. And I would say the other team then is Team Satoshi, or team let's use Bitcoin as money. And let's build the infrastructure to make that easier for Bitcoiners and for adoption of everyday transactions with Bitcoin. So, do you agree maybe that you see these kind of two teams forming to some extent? And if so, do you feel like one is better than the other, or is it still your same perspective of everything's good for Bitcoin as long as Bitcoin retains the same properties that it's always had?
Yeah. I think I agree with the perspective of the two camps forming. Um, but I think it's also somewhat of a false dichotomy. Um, I don't think anyone is saying. So I'll use stretching as an example. It's the most well known of these digital capital, digital credit products. Um, I don't know of anyone that is even thinking or saying stretch or Bitcoin. There are a lot of people who are saying Bitcoin, Bitcoin only, and so that's certainly Team Satoshi. But I don't think anyone is saying, um, it's black or white, one or stretch only, I should say, because some people are saying Bitcoin only. Um, and so it's kind of a false dichotomy. I think that um, most people who are thinking about these things um, with due diligence see that there's value in both. And I'll kind of go back to what we were talking about before is there is no right traditionally what we would call like a 60-40. There is no percentage allocation that people should have, 60-40 of this versus this. I think a lot of that depends on people's current life situation, time horizon, to be able to modulate those percentage allocations. Um, but yeah, I agree. I think from a perspective, there are some people who are taking that are starting to form into those camps. But I don't think that people are making the split of saying stretch only, don't hold your Bitcoin. Um, yeah, that's kind of where I land on it.
Okay, so do you feel like it's bad for Bitcoin long term, potentially, if the overarching narrative is the digital capital narrative of Bitcoin? Because, that kind of seems to, go against maybe what was in the white paper. And in some ways, it's adoption of Bitcoin, but it feels like it's adoption of Bitcoin by players that do we we don't really, I won't say don't care about, but Bitcoin wasn't really created for, maybe is the right way to put it. I'm not sure how to say it.
Yeah, yeah. Um, I still think that everything is good for Bitcoin. Um, I think that um, why you know this this is probably net good for Bitcoin to get people exposure to it. And then at the same time, it's bad that people aren't holding Bitcoin in self custody because they expose themselves to counterparty risk, third party risk, potential confiscation, like we previously talked about.
Yeah.
Um, and so, personally, for me, I fall back on what makes Bitcoin interesting and unique versus everything else that we've seen. And it's those things. It's secure, decentralized, permissionless, rules without rulers, censorship resistant, confiscation resistant. And so for me, it's important to hold Bitcoin for those intrinsic values. And then I also think about if I were to give dollars to a treasury company to execute some of these flywheels, but they're just buying the Bitcoin, why don't I just go buy the Bitcoin um, and land at a similar place than they are? Um, but also I understand that people, maybe closer to retirement, in retirement, or they're still of working age but just lost their job and they need um, a way to fund their lifestyle, need an income until they land back on their feet. I think that there's also a valid use case for products like Stretch that provide that income. But again, it's not sell all your Bitcoin to buy Stretch, at least not in my eyes. It's you know can I construct an allocation that makes sense to preserve the majority of my Bitcoin held in self custody while also funding lifestyle?
Yeah, I'm into that. So if I had to maybe condense what I'm hearing from you, it's that it's not necessarily that, the team Sailor, if you will, is bad for Bitcoin, because there's also this parallel push to continue grow adoption as Bitcoin, as everyday money, for folks. The only thing, maybe based on what I heard from you, that might be a negative is that people are less likely to continue down the Bitcoin rabbit hole and understand what actually makes Bitcoin unique, and the fact that they can self custody, they can be sovereign. Because if all they ever do is buy an ETF, buy a MicroStrategy product or something like that, then it's like, well, did they really understand Bitcoin? Did they really allow Bitcoin to benefit their life to the extent that it could? Would that be a fair way to summarize your perspective on it?
Yeah, yeah. Actually, that's a really good way. I've said this before in the past. Um, in why I wasn't a fan of the ETF is it's too much of an easy button. I go into my brokerage account and I hit buy. I think it's an instantaneous final settlement, but it's not. I think that I own a share in the company when I don't, and it's actually the DTCC that owns it, and I have a paper claim to that ownership. But the easy button, um, it is a massive barrier to studying Bitcoin. And so
Mhm.
when people go into their brokerage account and they buy, even if they bought the ETF, they're like, "Hey, this is the most pure form that I can buy because I don't want to learn how to self custody." Um, they're giving a lot. They're giving up a lot of freedom um, to go that route, and that next barrier to entry is like a massive roadblock, and they never go further because they can tell all their friends that they own Bitcoin when in reality it's a paper claim to Bitcoin.
Yeah, I'd agree with that. And I really appreciated what you said about, when you're thinking about constructing a portfolio, maybe for someone in retirement or nearing retirement, It's there is a good perspective to take is how do I construct this portfolio to preserve my self custody stack for maybe ever, for as long as possible? Because that really is the perspective that we take with a lot of with our clients. We primarily
Mhm.
work with retirees, and we've really built our portfolio strategies to provide the income that they need without touching the self custody Bitcoin. And we try to view it through two different lenses. One lens is our long-term savings, and this is the bucket or allocation, if you will, that is self-custody in cold storage. It's optimized for sovereignty, security, long-term wealth generation, protection against these black swan events, government seizure, all that kind of stuff. The thing that makes Bitcoin Bitcoin. We're preserving it in that aspect. And then we have the second bucket where we're trading Bitcoin, which a lot of people would say never do or don't like. We're really just using Bitcoin as
Mhm.
a performance driver for this section of the portfolio. So we have two separate, if you will, Bitcoin allocations within our retired clients' lives. And that allows them then, to your point, to never have to touch their Bitcoin, never have to put it up as collateral for a loan, nothing like that. Like it is truly set aside to benefit them in the way that only Bitcoin can. I think this is a good point to transition into our next topic we'd like to discuss, self custody. I mean, this is really what you're saying. This kind of Wall Street maybe takeover of Bitcoin is making it a much easier for different pools of capital to access price exposure to Bitcoin, but it's not accessing the true revelation maybe that Bitcoin is. And what brought a lot of you and yourself and even earlier Bitcoiners to Bitcoin and to believe in it in such a or maybe to champion it in such a way that they do. So there's a lot of different takes here on self custody, but I want to start with I'm really having conversations with a lot more people that they understand what the ETF is to some extent. That, to your point, is a paper claim. They don't hold the Bitcoin. They can't leave the country without their custodian saying that they can take it with them. Um, but they also are hesitant and they understand the responsibility that self custody is. And so they're landing on a middle option, which looks like holding it on River, for example. Anyone, custodians in general, I always steer clear of Coinbase and any custodian that is offering, shitcoin trading. But I do feel comfortable with River. I do feel comfortable with, I mean, really, really, River's number one in my opinion. I would say Strike. I believe Jack Mallers is a good guy and is doing things right. I feel like they probably have good security practices as well and good financial health. Um, and so people really see this as a solution to own actual Bitcoin. Of course, it's not in self custody, but it does solve a lot of their problems. Like they might lose it because they make a mistake. They might, maybe it's download an app that turns out to be a scam, like Sparrow Wallet was. We saw a few of those go around. Or inheritance is also another thing. Maybe they understand self custody and what it takes, but their wife doesn't, their kids don't, whatever that is. So where do you stand? Do you feel like it's a good option to hold on River, or do you still encourage people to take that next step, go down the path of self custody?
Uh, I fully recommend people take self custody. Um, River is a great product. I've heard numbers thrown around about. I think it was a space or maybe it was a podcast. But I've heard numbers thrown around about percentages of clients and amounts that are held with River versus moved off into self custody. I think it's great that they have proof of reserves so that people have that level of comfort that it's not being sold or rehypothecated or anything like that. But ultimately, Bitcoin in self custody is the superpower. That is the innovation. That is the discovery. Um, Anything less than that is exposure to risk. And while I think River is a great product to be able to do something like that, I think there are other candidates as well out there um, that offer somewhat of a balance. You've got products like Unchained where you hold the majority of the keys, and they exist in the event that there's a mistake or there's a loss of a single key. Um, so there's a good balance there. Now, if you're not comfortable holding two of three and you want something else, you've got others in the space like OnRamp who offer multi-custodian collaborative custody that kind of fits in that bucket as well. You've also got Casa to a similar extent, although in my mind it's a little bit different. But I'll leave it at that. So I think that there's a wide range of options. Oh, and I forgot, you've also got companies like Anchor Watch, Lloyd's of London, insured up to like $250 million. So there are a lot of options out there for folks while they're transitioning to self custody. But if you give up that superpower, then you don't reap all of the benefits of Bitcoin. And so that's why I always um, steer people towards self custody. But I also fully acknowledge that self custody is a journey in personal responsibility. Like, it's unreasonable to take somebody who's brand new to Bitcoin and say, hey, I want you to go and grab multi-vendor hardware from 3 different providers and geographically separate, multi-jurisdictional, these 3 keys in different locations. And oh, by the way, if you lose one, it's gone forever. So you might as well get this backup, but this backup can't be paper because paper burns and ink fades. And instead, you've got to go get metal. And all of these pieces of metal have to be stamped, have to be verified, again, dispersed around the world. It's unreasonable to have that solution for somebody who's brand new. So it is a journey in personal responsibility. And if somebody lands at trusting a third party custodian and they never go any further, then their journey stops. And so that's why I always recommend, hey, this is probably the end goal. And you don't have to implement it tomorrow, but you have to make steps, deliberate steps to move in that direction again, or you don't benefit from the discovery of Bitcoin.
So, what are the best next steps for somebody that is really scared, nervous about it? They do hold on River, Coinbase, whatever exchange it might be, but they want to go into self custody. I mean, where do you recommend they would start?
um, I don't want to sound like a shill, but I think it would be great for them to have a conversation with one of the mentors. But outside of that, I think that starting with a small amount of actual Bitcoin, denominated in Satoshis, and just seeing what's in the realm of the possible, where you can transfer value across your city or across the globe with no one's permission. All you needed was electricity and an internet connection to be able to do that. And then there are tools out there. I'm a big advocate of testnet, and I'm surprised by the number of Bitcoiners who have never touched testnet. But it gives you the ability to do just about everything a new person in Bitcoin would want to do with zero risk. These testnet sats have no monetary value, but you can go into testnet, create a new wallet. It's a hot wallet. Fine. Send and receive transactions, consolidate UTXOs. You screw it up. So what? Go to the faucet, get some more free testnet sats, and do it again. As that journey in personal responsibility continues to advance, you go and buy a hardware wallet. Connect it to testnet. You can import it safely using the XPub, making sure that those private keys are secured on the device and continue to be air gapped. And then you get familiar with how to transact using a hardware device. You can go buy 2 more and you can set up another 2 of 3 multi-sig. Again, doing this all in testnet. It's certainly complicated, and it's one of those leaps that most people aren't going to take without a best friend or a friend helping to guide them through that journey. But I think the people who don't take self-custody now, their kids or their kids' kids will take self-custody. And if they don't, they probably wish they could. And they're probably prevented based on jurisdictional restrictions.
Mm.
I also think that self custody in the future is going to look vastly different from what self custody looks like today. Um, if we look at the evolution of transacting with a fiat currency like the dollar, we had coinage, and then we had paper dollars, we had checkbooks, we have credit cards, and now we've got tap to pay on our mobile phones. Um, that really illustrates that development and innovation is going to continue at the speed of need at the time. And I think we're going to continue to see that in Bitcoin. And we've already seen that. Um, a lot of what I was talking about with self custody is on the base layer. Um, but there are also developments on layer two and side chains, whether it's Lightning, Liquid, eCash, Arc, Fedi, you kind of name it, where you have the ability to self custody, albeit it's a hot wallet, so it's connected to an internet connected device, but you still have the ability to self custody. And I think the future is going to look something like that same evolution of fiat, where the development will meet the need of people to be able that would allow them to both self custody their Bitcoin and their Sats while also making it easier to use. So I'm not juggling all these air gapped hardware devices and following 3 different tutorials for 3 different devices. Um, but it's going to take time. And that's why I always advocate people start studying Bitcoin and self custody now, because you're building that foundation that's going to make these new products a little bit more intuitive versus trying to pick it up, later on down the road.
So you feel like then there will be enough evolution, innovation in Bitcoin custody to allow, everyone is a broad term, but let's just use it for now. Everyone to be able to self custody in the future. You feel like that will happen.
Over a long enough time horizon, yeah, I do. Um, Probably not in my lifetime, maybe not in my kid's lifetime, um, but over a long time horizon. Like if we think about, um, the existence and demise of fiat currencies and how long those have existed, and even hard money standards like gold, um, there have been continuous iterations and innovations to make it easier to use. And I think it's unreasonable to think that innovation and development on Bitcoin stops all of a sudden. It's only going to continue.
Yeah, I'd agree with that. But I think the time horizon you is very important factor in this. And again, this is why I appreciate talking with you because you do have a balanced view of things. Um, you know, I feel like a lot of hopium, bull tard to use your phrase. Uh, a lot of the takes on Bitcoin recently is like, okay, by 2030 we got $1 million Bitcoin and we're gonna be on a Bitcoin standard, all this kind of stuff. And I feel like that's largely just because that's what draws attention. And so people produce content that says throws out those kind of things. But I am of the impression that this is going to take a lot longer than we think. And I feel like it already has to some extent. When I talked to earlier Bitcoiners, when I say earlier, I'm saying like, 2012, 2015 timeframe. It seems like there's a good chunk of them that thought this would happen a lot faster. Um, and it just hasn't still to this day. Here we are, 12 years removed from that time frame almost. And, yeah, we are further along, but I don't think we're to the extent most people expected. The kind of fiat's going to break overnight, die tomorrow, crash and burn, and all of a sudden, we're going to usher in the Bitcoin standard. I just don't feel like is reality. Um, would you agree with that? That this is going to take a lot longer to get to the points that people think are going to happen in the next few years?
Yeah, I think I do like the way that Parker Lewis puts it for gradually then suddenly. And I think that I've said this before. I think that things happen slower than Bitcoiners want things to happen. but faster than no coiners think is even possible. And really, I find it amusing sometimes when Bitcoiners who talk about having a low time preference are impatient. Um, I think I said this 2 years ago with Robin also, that I think this transition is on the order of years and decades. And I took heat for it in the comments for that exact same thing. Just like you said, people are they're being a little bit more high time preference, saying, "Oh no, did you see this and that? I mean, this is going to happen by next year." No, I don't think so. Um, I think it's a much more gradual transition up until a point when it has to be a suddenly. Um, but anybody who tries to identify when that suddenly moment is probably being disingenuous, because we've got a brand new, never before seen asset that is is change has the potential to change the way that humans interact and transact uh, without uh, without a select few who can pull levers on the monetary system. You can't predict that with any level of confidence. Uh, the best you can do is um, stay solvent, stay humble, and stack sats.
Love it. Yeah, I do feel like this taking longer is something that a lot of people aren't prepared for. To your point, position yourself accordingly. A lot our client base, of course, it's a lot uh more important because they're actively living off of their assets. And so, they do have reason to be somewhat high time preference, at least when it comes to the USD price of Bitcoin. And so, a lot of people I feel like are not prepared for that scenario where this might be 30, 40, 50 years out. You said your lifetime and your kids' lifetime. Your kids are still pretty young. That's a long time. That's maybe 60, 70 years we're talking about here. And maybe we are just that early. We'll see. But I don't. I want to circle back to the self custody conversation. You said you don't want to be a shill for Bitcoin Mentor, but I will just say for everybody listening, AC has great character. He's very knowledgeable, and he's a wonderful teacher when it comes to the technical aspects of Bitcoin. And so, if someone is wanting to learn, I do want them to have that resource. To be able to talk to you or somebody you trust as well, to be able to get the training from people that they can trust and will actually set them up for success going forward. So feel free to shill.
Yeah, I appreciate that, Mitch. We kind of pride ourselves over at Bitcoin Mentor as far as meeting people where they are, identifying what their goals are with Bitcoin and self custody, and then developing a specific roadmap tailored to them to get them where they need to be. Whether it's taking that first step of buying their first set of sats, or it's moving Bitcoin from exchange into self custody, or beefing up their self custody solution, moving from, a single sig to single sig plus passphrase to multi sig. We cover the wide range of it. We talk about, Bitcoin held in deep cold storage, how to use Bitcoin privately on different platforms. Really, it's just developing that tailored solution for individuals. So I appreciate that. Thanks, Mitch.
Absolutely. Well, I know we've talked about a wide range of topics, and I've really appreciated the conversation. Are there any final thoughts that you'd like to add to wrap things up?
No, I think it was a good conversation. Um, I do think that I know for a fact that some of my takes are unpopular. And like I mentioned to you before we started recording, a lot of times it's my way of trying to drive conversation, because I think sometimes the best way to have a conversation is say something a little bit outrageous, and then get somebody to rage bait tweet you back or something like that. And I think that's where the real message is kind of discovered or found, is in the conversation. Like you said, a lot of times people are engagement farming, and they're saying or posting or tweeting what they think is going to get the most impressions or the most likes. And, to each their own. But for me is, I'm a truth seeker and I want to get to, what does reality looks like? Earlier you'd mentioned that um, Bitcoin distorts reality, and I've heard that a couple times, and I had a little nuanced twist on it, and it, Bitcoin clears the clears the distortion of reality from a lot of the manipulation and propaganda that takes place in our world today. So Bitcoin allows you to clear through and see through that distortion to get closer to what reality looks like. And so that's kind of where I come from is I'd much rather have a conversation than try to engagement farm.
Yeah, absolutely. And I respect that about you. I think a lot of people get themselves into trouble taking advice from half baked takes and moon boy price predictions, where you really do need that context and nuance that these conversations can provide, which is why I wanted to start the podcast in the first place to be able to talk about things that needed to be talked about and addressed and be honest rather than whatever's going to drive sponsorship, stuff like that. So I appreciate your time today, AC. Where could people find you if they want to connect with you on X? Obviously, we've got our local meetup. So I've come across actually quite a few people in Colorado. Not a quite a few. That's exaggeration. I've come across a few people in Colorado Springs that had heard nothing about it, or they went when it was a shitcoin meetup prior to, and they're like, "Oh, that's not for me." So I'm trying to loop them back in. So maybe if they're listening, we could share that as well.
Yeah, the best place to find me is on Twitter or X. Um, I operate under my actual name. People can find me, and maybe we can throw a link in the comments or in the description. But I'm most active there. Some people can find me on other areas. I might not see their messages for a while, so Twitter or X is the best place.
Sounds good. And if you're local to the Springs, the meetup is the third Thursday of every month from 6:30 to 8 at the Platinum Group Real Estate Building. And we've had a lot of great conversations in there. I haven't been able to make it recently, and I feel really bad. Jacob and I actually talked about it recently that we need to get back to attending the meetups. So we'll do that. But if you're interested in joining, it's a lot of great guys talking about Bitcoin only and delivering a lot of the conversation, education stuff that we're talking about here today on the podcast. So appreciate again the time, AC, and we'll have to do it again soon.
Awesome, definitely.
Thanks for sticking around to the end. I greatly appreciate it. I'm Mitch, the founder of Strong Wealth, and we help Bitcoiners retire early and stay retired without sacrificing their peace. If that interests you, head over to strongwealth.net to learn more about us and our services. And don't forget to subscribe to the show. We really appreciate you watching all the way through. I'll see you in the next one.